We have Nirmal Jain as well joining in the show right now. Nirmal, hi, good morning. Good to have you in the show. I know the markets are not enthused, but what is it that you made of the first tranche of the economic relief package which the finance minister announced yesterday?
I think the package is strong and intentions are right. But only thing we need to see how is it executed and whether the intended benefits and the money reaches the intended segments of businesses and economy or not. Because if you really see, then in case of NBFC, whatever has happened in the last 1.5 years, some of the schemes have been fully effective, some of them have been partly effective, and some of them have been totally ineffective. Just to take, say, for NBFC now, there's a 30,000 crore of liquidity. But they are saying that secondary, both the bonds will be allowed to be bought in this. So when you have a secondary bond, then the money goes to the mutual funds. It doesn't go to NBFC. And it doesn't help. So in this ESPR also what happened that banks borrowed money at a very cheap rate from RBI and they lent it to AAA grade NBFCs or AAA grade corporates. And they actually can borrow from the market also. So what they did, they took the money and replaced their high cost debt with the low cost money from banks. The entire subsidized money went actually not into the hands of NBFCs or people that really need to use it. So now you have 3 lakh crore credit for MSME, but we have to see that who is going to deliver that credit because banks don't have reach and the last mile connectivity to disburse 3 lakh crore rupees of new MSME loan. And NBFCs don't have money, at least at this point in time. So unless the package is holistic, that they also provide liquidity along with the credit guarantee, the intended benefit may not reach the segments of society that they're intended for. An NBFC case, on even the real estate fund which government had launched last year, which was 30,000 crore, to bail out real estate projects. But I don't think anything has happened to real estate sector because the rules that one, the interest rate and the yield expectation is higher. And secondly, they say that the money should come to the fund first. What would that mean? That any project that is being transferred to them will become NPA here. Because supposing if a project which is funded by IIFL, we transfer it there, then the first cash flows go to them, then they won't be able to service even our interest. So I think there are, the way the schemes are ultimately drafted and get executed, we really need to pay attention to that and the government needs to do that. And then only, so the intentions are very good. The package is very strong. 3 lakh crore rupees is really something which is meaningful, which can make a difference. But one has to look at holistically whether this will really get executed and money will reach at the ground level to the MSMEs and in what time frame and at what cost.
Sure, that's a very interesting point that you've made, Nirmal, and digging deeper into what was announced yesterday is when you really get the devil out of the detail. But Nirmal, on the markets, the reality seems to be far away right now from what any of the announcements are indicating. Besides, of course, that initial pop that we saw yesterday, the markets are aligning themselves to the reality of what's happening across the world. The fact that Jerome Powell last night said that further stimulus from the Fed will be required, the fact that there are fresh new cases coming in, even in regions like South Korea and Hong Kong, wherein it almost seemed that the virus has gotten eradicated, or for that matter, even in mainland China. Markets seem to be aligning towards, these parameters and these cues right now. Would you say that maybe the package has come in a little too late for the markets to rejoice?
So it's very difficult to say because we don't know how this crisis will ultimately pan out and how long will it last. So if it lasts for much longer, then probably would look like that these packages are in time. I think it's not too late even now, but we really, so the whole world is, there's a lot of uncertainty. It can be a V-shaped recovery in case there's a quickly a cure or a vaccine is found, or it can be a prolonged L-shaped, which can be a complete disaster for a much longer term because if most of the countries and banks, there are a lot of money and still they can't really recover. I think it's very fluid and very difficult to say, but most likely scenario, and I'm an optimist, is that it'll be quite a V-shaped recovery or a U-shaped recovery. So we'll see that the 1 or 2 quarters are affected, but then bounce back. The market always looks ahead. So, they will take 1 or 2 quarters bad results in stride, but they will look at future ahead and, find that equity as an asset class is still attractive and is attractive not only to the individual or retail investors, but even to institutional investors all over, because otherwise the yield on the debt paper will be very, very low. And actually the world is awash with liquidity, and money will find its way in market because people will take risks once they have some visibility, however far or whatever it be, of that the things will recover.
Nirmal, so what is happening at the IIFL NBFC book? Are you looking at
Yes, sorry, you can go ahead.
So what is happening to the NBFC's business of IIFL? Are you looking at contracting it? Are you looking at reducing it purely because of liquidity and purely because of risk?
So, in this CLTRO, the primary money that we got is only 100 crore rupees, and actually we repaid 2,400 crore rupees of loans in last 1 month. We have been in touch with most of the large banks. So at this point in time, we have to play safe. We have to make sure that, we have a liquidity for next 6 months provided to meet all our contractual obligations. So we are going slow on new credit disbursement till we see that the line of new money or the liquidity from banks under whatever schemes government is announcing is clear. So we are a AA rated NBFC. Our outlook has been reaffirmed by CRISIL, but still, as I said, that liquidity and the new credit from banks has been really tight, and all other avenues of credit like mutual fund, insurance companies have dried completely. So we are conserving liquidity. We are just waiting for things to recover. It's not that we have stopped credit disbursement completely, but we have slowed it down significantly and we are being cautious.
What is happening to the agency business and the brokerage business? What's been the impact of lockdown on your wealth management business and the brokerage business?
I think brokerage business has been doing pretty okay because online broking is doing well. There are no, in fact, that has picked up. The volumes have picked up. The number of new customer acquisition has picked up. And what are the reasons? Very difficult to figure out. Is it whether people are consuming less, so they are saving more, or they are at home, so they are trading more, or there are new millennials which are coming to the market thinking that market is attractive. So that is about brokerage business. Wealth also. So most of the HNI investors are cautious. And so they aren't, there's not much churn, or there is, again, they aren't really allocating more to equity. They have allocated a little bit more, but still they are very cautious. The agent, the advisory business is picking up well. That is what we, there's a path that we started moving around, that which is IIFL, where we'll basically become a pure play advisor and just remove the transaction cost out of it and just charge advisory to the customer. I think that is picking up slowly but surely. There are challenges because these are cautious times. It's very difficult. And when customers don't allocate assets to risky assets or they don't churn much, then obviously your revenue is impacted. But we are doing well.
I appreciate your time. Thank you for joining us.